Spruce Capital Management unveiling its latest short position today. Construction Partners, ticker ROAD. They allege the infrastructure company is under greater pressure than is widely understood, masked by poor transparency and aggressive financial presentation methods. The shares are down about 10% on this report. The company has responded, saying in part, it is clear that the short seller made numerous false statements and is deliberately attempting to mislead the market. For more, let's bring him in. He's Ben Axler, the founder and CIO of Spruce Capital Management. Isn't this a fun business to be in, Ben? Welcome.
It's a difficult business, right? And it's one that you have to really be passionate about to survive.
Right.
And you also have to really dig deeper and get an edge, right? There's a lot of information out there. And, you know, with our current report on Construction Partners, we got some freedom of information requests, getting contracts to look to see, you know, at the underlying health of the company. Before
we dig into that, there was big news in this space the last couple of weeks. Hindenburg Research is shutting down. That was a very widely followed firm. And a lot of people, Jim Chanos, noted short seller, and others have made the point, this is a very difficult thing to do in this market. The market has been on a tear. It's very difficult to kind of see this work pay off. The regulators are all over it a lot of times. Look at what's happened with some of these firms. So I am curious about your thoughts in this kind of dwindling industry.
Yeah, well, it's a difficult business. You have to be passionate about it, and you have to take a long-term view. I mean, we're actually optimistic that the tide's turning a little bit. Under the Trump administration a number of years ago was a great fertile opportunity for shorting. We did very well. Why? Because Mr. Trump wants to roll back regulation, right? He wants to stimulate business. And so there's an old saying, when the cat's away, the mice shall play. And so short sellers, you know, we fill that regulatory void by calling out aggressive business practices and stocks that we think are overvalued.
So just to make sure I follow, because they had a lighter regulatory touch, there were basically more companies proliferating who might not have been, how do I say it, Ben? Who might not have been completely above board, giving researchers like yourself a better set from which to pick from. I mean, I can see that as a great way of the market working, but I can also see that as a regulatory failure.
Yeah. Well, I mean, look, regulators have to do their job, but it's very clear, Mr. Trump's been very clear that he wanted, Gensler out, that he wants to stimulate business, that he wants to roll back the tide a little bit. And so that's why we're optimistic. We're off to a good start. We've had 2 short reports this year, one on Proceptive Biorobotics, and then today on Construction Partners.
Erie as well was another one I think we discussed, and those shares have been struggling somewhat. Okay, so on the issue of Construction Partners, ticker ROAD, what do they do?
Okay, so they're a vertically integrated roll-up of asphalt production and paving of roads. And, our issue here is that where the real value is in the aggregates, right? And the company's not transparent about how much proven and probable reserves they have, how much production they have. That's a good business. You want to be in the aggregate business. Paving roads, a little bit more difficult. And a lot of their business is tied to State Department of Transportations. They've got a big uplift in Florida. We sent some FOIA, Freedom of Information requests to Florida, and we see the contract awards are down 22%. So they've pivoted through a big bet in acquisition in Texas. We have some concerns with that business and the operations there. Overall, we think the business is valued as if it's the best construction aggregate business when, in fact, you're really buying a lower margin paving company.
Is there a smoking gun here, or is this an area where you think that it's an opportunity to short because maybe it's just not going to live up to what maybe the bulls think is really possible here?
Yeah, I think it's part and parcel of what we're seeing in the market. Particularly, we've had a big move up in the small caps. This is, I guess, a small cap, $5-6 billion market cap. Very richly valued, again, misvalued relative to what we think they really do. We think it underperforms the market. We're long the industrial sector, as a hedge against it. And so it's a great relative value short.
So that's part of your strategy? Is it like, let's say that there's a name in particular in this sector that you're short, you're actually long the rest of it almost as like a pair trade?
That's right. I mean, we want to produce short alpha, right? So we think that this company is overvalued. We think it's got a lot of governance issues, poor transparency. They levered up the balance sheet to buy this underperforming asset in Texas. And so we just think the valuation doesn't make sense. It's the highest valued company relative to its peers, so we would expect it to underperform.
Have you spoken with management, and do you typically engage with a company while you're working on these reports?
No, all of our research is based on public information, so we review all the transcripts that are put out there, all the SEC filings. We do the Freedom of Information requests. We talk to people in the industry. So, we think we have a good understanding of the business. The company's response is pretty much boilerplate to what we get, that we misunderstand it. We'll let the market decide, and so far the market seems to be agreeing with us.
Finally, let me turn back to something else that the founder of Hindenburg said when he was shutting up shop, and he said he might pivot to an open source model. I don't know exactly what that means, but the idea of, like you said, a lot of the stuff that you're doing is publicly traded, maybe just allowing people to be in and can be part of that process, maybe adding to the work in a collaborative way. What do you think about that idea?
Yeah, I don't really understand what he means by that. I mean, in a sense, all of our research, we put it out. It is open source. You can see exactly how we get to our conclusion. You can see our research methods, what we do. So I don't quite understand, where he's going with that. But I think it's good. I think we definitely need more short sellers. There's been fewer for various reasons, burnout, difficult business. But we certainly need more, and I think it aids the market and improves market efficiency.